What if I told you guys there's a way you can stop guessing on direction of the market and start winning and being correct at what direction the market's going to go? I can give you guys my exact roadmap to how I establish each and every trade that I get and truly work to unlock more consistent profit for you guys. In this proven checklist, I'm really going to go into a deep dive into how exactly it works, just specifically on the entry side. That way a lot of you guys can focus on having more consistency and understanding how the market moves. You guys can really start to trade smarter, not harder. Without further ado, let's jump right into things. All right, guys, here we're looking at the 5-minute chart on ES. 90% of my analysis is done just on the 5-minute chart, okay? And I trade ES in particular on the future side. If you're an options trader, stock trader, the equivalent, might be the SPY, the SPY, something like that. And really how I break down the market and how I look at how the market works is I think it moves in two ways. So what we tend to see is we tend to see trend structure, right? We've all heard the term trend structure, and if you haven't, that's totally okay. I'll explain it to you really quickly. It really comes down to higher highs, higher lows, and for a downtrend example, which we don't actually see in price here, that'll look something like this: lower lows, lower highs. This is trend structure, okay? And I break it down into two specific phases that the market tends to go through, okay? Phase one is what I call a range phase, okay? So kind of step one in identifying trend and the market is identifying a range, okay? A range is defined where price trades in between 2 points. It may not look like this in the moment, but as price is playing out, somewhere like, let's say, here, price is here, we could identify that, hey, we're trading between a high and a low if current price is sitting in between that. That would be considered a range. And the cool thing is we tend to see multiple ranges throughout the day. Like, for example, here'd be another one where at some point price is trading in between itself, and same goes for the downside. Okay, price trades in between itself, kind of like this. Whoops. And same for right here. Okay, so remember, this is a phase one, and this is a range. Okay? Where a lot of traders go wrong is they actually trade within a range. Okay, and that's why for a lot of people, trading can be really frustrating because they actually find themselves, in my opinion, trading at the worst possible time and sitting back at the most opportune time to trade. And I'll explain that to you guys in heavy detail. For me, this phase is for watching, okay? So here and here, this is all for watching. I am not going to trade. I'm not going to buy or sell anything. I'm just going to watch when price is trading between itself. And why most traders find themselves trading in this phase is a lot of retail strategies out there, really encourage it. There's built a lot around supply and demand, support and resistance, where they see price, maybe reject off of this level here, and, maybe they're going to short the next time it comes up to that level, or, they're going to try to buy the dip and guess exactly where the dip's going to be. It's impossible to do that consistently, in my opinion. It's very predictive. You're trying to predict what and where the market's going to go. And to me, it's next to impossible. Instead, it's just for watching and waiting, okay? And the second phase in this philosophy of price action that I have is when price exits this higher low, it enters into a trend phase. So a trend phase is like here to here, where price starts to move down and that direction is consistent, or move up and that direction is consistent. Like this could be a trend phase here. This could be a trend phase. This is a trend phase. So it goes into trend phases and then range phases, and trend phases and range phases. Okay, so you guys might be asking, it's not typically this cut and dry. Like, it's not typically, hey, it ranges and then it goes up or goes straight down, and You're right. It doesn't look exactly like this, but it doesn't look that far off if you know exactly what you're looking for, and I'll kind of explain why here. So think about those range phases versus trend phases. What we see in the morning, so kind of when the U.S. market opens, what we tend to see, believe it or not, is we tend to see the market range, okay? So the market ranges generally within the first hour, we tend to see a range. And remember how it's defined, just between a high and a low point, okay? So what I like to do is I like to identify that high point, identify that low point, kind of right after the market opens, give it some time, and let it set up. And for me, it looks something like this, okay? Where we have our high point and we have our low point. Now, some of you experienced traders may already see something that looks probably different from what a lot of you guys focus on, which is I only focus on candle body highs and lows. I don't tend to focus too much on the actual price action high or the actual price action low. My philosophy is the buying and selling is actually done kind of more or less in a block or in a range where people are buying through here or selling through here. I can kind of drag it out here where you see all these wicks here and then all these wicks in here where the buying and selling is actually being done. My goal is to identify when that stops, and I'll show you what I mean by that here in a second as we let this play out. So what I look for is waiting to see price action break and close over. Not just price get over that level, but I want to see a candle actually close above or below. In this situation, we see it close above, and just real quick before I move on from this, I want to clarify that it's the same idea. If price closes below, I may look to take a short trade. Okay, so it's generally no different. It's really hard to tell here. I can zoom way in real quick, but we actually do see price close and break below. Close and break over. And that would be, in this situation, with price action, this is price action from today. We see price break and close over. That would be my entry in this situation. So this is a situation where I would enter into this trade, and the reason being is we're entering into a trend phase. So very similar to like a range that we see up here in the top right. Okay, price is breaking over out of that range and it's entering into a trend phase. So we exited the range phase and we're entering into a trend phase after price broke above. So the idea here is price should be moving cleanest and clearest upward in this situation. Will it move just straight up and break out? Sometimes it will, sometimes it won't. But the idea is there's a high probability that the trend will continue in this direction for a significant period of time. Okay? So in this situation, for example, here'd be my entry on that candle close. Okay? So I'm entering, we'll say entry into this position as we see price move up. And I can show you guys as we see price play out, we actually see it retest off that level, which only confirms the trade even more, that it's, our levels or our range was exactly where they should have been, because price respected it, completely. And we really see price play out, okay? So we see price trend up almost all day. Like, really, it's that simple. I mean, with my strategy too, we see, a couple ranges a day, but, with the way I trade, I mean, really, I may take 1 to 2 trades a day most of the time. Really let a lot of my good trades play out. I mean, as you guys can see, letting this trade play out for the majority of the day, just having the right entry, not trying to predict, more of trying to react to where price is going than try to predict where it's going to go. I mean, I'm just waiting for price to break over the range, enter into a trend phase, and then really allow the trade to really play out. And then the other thing is you can get pretty finite, I guess would be the term, like with the strategy as well. Like when you start to see, like here's another example, like when you start to see price trending up, right? We again technically have a high point here, right? And then we technically have a low point here, and we're trading in between that high and low. It's not anything super significant, but you can, again, look at that as a range. So you could look at something like this as a range where we have a big range. We tend to see a big range in the morning. I would say about 80% of the time in the morning the market's going to range. And then we tend to see, you know, a few other ranges throughout the day as well. And in this situation, you know, we see price struggling to get over. It breaks over. That could be another opportunity of an entry, as we can see, where price really starts to push up. So again, if we're looking at this exact drawing where I was talking about price structure, higher highs, higher lows, and I remember telling you guys that, you know, it's not exactly going to look picture perfect. And, you know, I was questioning you guys on, you know, you guys are probably saying, you know, it doesn't look that perfect. But when you really break it down, it looks awfully similar to actually, you know, what you see in a lot of trading books and things like that when it comes to price structure. You just have to really know what you're looking for and how to actually look at the market. All too often, traders are really trying to overcomplicate price action and price direction. And really, you know, I went into some detail about how I build a range, how I view how the market works, why I think it works that way. And, you know, in a situation like this, like where my entry would be, it would be on the candle that breaks above. Same situation here, candle that breaks above, and we see price play out. So this exact example could be applied additionally to inversely to a short trade. Like literally, if you just mirrored this chart upside down, it would have been two short opportunities where price, you know, moves down. So it doesn't matter whether price is going up or down. I'm building those ranges. I'm not trying to predict where the market's going to go. I'm trying to react to where the market is going at the time. So if price breaks up, I'll trade upward. If price breaks down, I'll trade downward. So I hope you guys found this video very, very useful. I'll tell you what, guys, in the description below, I'll put a link down in the description below. You guys can book a call directly with me, one-on-one, where I will show you guys in more detail my strategy if you really want to know. And then on top of that, we can go over some aspects that you feel like you're struggling with as a trader. Questions you got for me, questions you got about the market. I'm here to help you guys answer those questions. We can go over a strategy and system that works for you guys and helps you guys get to a place you want to be. So go ahead, go down in the description, click the link, book a call with me, and we'll talk then. All right, guys, I'm signing off. Until next time, you guys know where and how to find me. Peace.